Ever wondered how the concept of venture capital came into existence? It all started pre-World War II, when wealthy families like the Vanderbilts and Rockefellers were the primary source of funding for risky ventures. But the year 1946 marked a significant change. This is considered the birth of modern venture capital. A Harvard Business School professor and war hero, General Doriot, formed the American Research and Development Corporation, widely regarded as the first true venture capital firm. What set ARDC apart was their unique approach of raising funds, not just from wealthy families, but also from institutions like universities, insurance companies, and investment trusts. This opened the door for broader participation in venture funding. Moreover, RDC primarily invested in technology companies, a trend that continues to define venture capital today. Their most notable success story: a $70,000 investment in DC, which later became a major player in the computer industry. Thus, the birth of modern venture capital was marked, setting the stage for a new era of innovation and growth. Now, let's travel to the heart of Silicon Valley, where venture capital firms began to cluster. This wasn't by accident. The proximity of these firms on Sand Hill Road in Menlo Park, California, created an environment ripe for collaboration and deal flow between investors and startups. This was the bedrock for tech giants like Apple, Intel, and Microsoft, who all received crucial early funding rounds that enabled their ascension to the top of the tech world. As the venture capital model matured, it developed different stages of funding to cater to startups at various points in their life cycle. But the reach of venture capital wasn't content with being confined to the United States. It expanded, spreading its wings across the globe, and began to fund innovative startups in a myriad of industries. Venture capital, once a localized phenomenon, has now become a global force driving innovation across industries. But what does all this mean for us? How does venture capital impact our lives and the world around us? The influence of venture capital is far-reaching, touching industries beyond tech. Consider Warby Parker, a company that revolutionized the eyewear industry with its direct-to-consumer model, all while receiving venture capital funding. Or Airbnb, which disrupted the traditional hospitality sector with its online lodging marketplace, fueled by venture capital. And let's not forget Tesla, a pioneer in electric vehicles, significantly benefiting from venture capital investments. These are just a few examples of how venture capital fosters innovation, driving economic growth, and shapes the future. But it's not without its complexities. Excessive startup investments without significant returns could potentially impact investor confidence and divert funding from established companies. Despite these challenges, venture capital remains a vital part of the entrepreneurial ecosystem. Venture capital, a catalyst for innovation and growth, continues to shape our world, one investment at a time.